Thank you, Gilbert. Thanks to you and the group for inviting us to the conference, and looking forward to sharing this important update with the audience today. As Gilbert said, I'm Josh Disbrow, one of the co-founders and the Chief Executive Officer of Aytu BioPharma. We are listed on Nasdaq under the ticker symbol AYTU. And if you're hearing this for the first time, or perhaps hearing it only again for maybe the second time, if I can get my slides to move here. Hold on a sec. There we go. Yeah, if you're hearing the story for the first time, you are, I think, hearing it at an interesting time in our history after having completed a significant pivot over the last couple of years to really get the company positioned well for growth. And an even more exciting time in that we just acquired a very exciting asset for depression, which we'll talk about. As Gilbert said, our mission is to improve the lives of patients everywhere, but with a distinct focus on central nervous system or CNS conditions. We have products currently in the market that address ADHD, and those products have continued to grow nicely. And most recently, just within the last few weeks, we've announced a very exciting deal whereby we plan to commercialize a product called EXXUA in the United States here starting later this year. And before we get into that exciting opportunity, I just wanted to level set with you in terms of where the company has been and what we've done over the last few years to position ourselves so well. We undertook a significant multi-year strategic realignment about 2.5, 3 years ago, whereby we really wanted to focus on the core prescription business, specifically our ADHD business, and to a lesser extent, our pediatric products. And we've done just that. And we've done that really by transforming the company and stripping away all the aspects of the business that were burning cash. We suspended our pipeline development program, which was poised to burn over $20 million. We refinanced our debt and actually even more recently refinanced it again to kick out its maturity until 2029. We completed the outsourcing of our manufacturing of our ADHD meds such that all of our products are now outsourced to contract manufacturers. And importantly, we wound down and sold off our consumer health business, which was also burning cash. And so we ended at the end of last year by dismissing some key members of the team, and that enabled an additional $2 million in OpEx savings as we go forward. And to bring us current to where we are today, we have just announced again within the last few weeks an exclusive agreement to commercialize a very exciting product called EXXUA that will launch again later this year. And all along the way, we've been consistently demonstrating the ability to actually get the company in a cash flow position whereby we've been EBITDA positive for the better part of the last 3 years. And we've done that on consistent revenue and decreasing operating expenses, which we'll speak to. Again, the suspension of the pipeline development program, the sell-off of the consumer health business really enabled us to improve our bottom line while preserving our top line revenue. As you look at the prescription business, which generated just under $66 million in trailing 12 revenues. And for a company whose market cap is significantly less than that, we believe we're materially undervalued on the basis of the current revenue, and even more so on the basis of where we think we can go, primarily through the adoption of EXXUA in the U.S. marketplace. I mentioned we've obviously stripped out a lot of aspects of the business that were burning cash, and this slide really speaks to the fact that not only have we been able to improve and really stabilize our gross margin, we've been able to materially improve our operating profile as we significantly improve the operating expenses, such that we're now operating at 61% of net revenue versus essentially just a few years ago, essentially burning really a significant amount of cash. So this has been quite the transformation for the company from an operating profile perspective. And if you look at how the company's been put together, it's been through a successful integration of multiple products through various M&A transactions, inclusive of the acquisition of Neos Therapeutics, which we closed in March of 2021. That brought with us Adzenys XR ODT and amphetamine for ADHD, as well as Cotempla XR ODT, a methylphenidate also indicated for ADHD. Prior to that, we had acquired a line of pediatric products, Carbinol, Poly-Vi-Flor, and Tri-Vi-Flor, and more recently have launched another ADHD medication, Metadate CD. But what is most exciting beyond the current business, which again generates almost $66 million in trailing 12 revenue having posted about $18.5 million in net revenue for the March quarter. So a really solid base business. We now get to enter an even larger market opportunity with EXXUA, which I'll talk about here shortly. And I should say the company today, as it's positioned, is essentially a CNS-focused company with a significantly less or lower focus on our pediatric products, understanding that they're a much smaller piece of our revenue. And so in the middle here, you see the two core ADHD brands that are driving the bulk of our revenue, Adzenys XR ODT and Cotempla XR ODT. These are truly the first and only extended release orally disintegrating tablets in the US. And so what that means is these are rapid dissolving tablets that work very quickly, last a full 12 hours. Adzenys, in fact, is approved by the FDA as being bioequivalent to the market leader, Adderall XR. And during a time when Adderall XR was out of supply for some period of time, this product was able to to really gain a nice foothold. Cotempla XR competes with the likes of Concerta, which is the leading methylphenidate brand. And this too is an orally disintegrating tablet, works very quickly, demonstrating specifically in children in a classroom study, 61% improvement in symptoms. And then we have a line of these pediatric products as well, which are relatively small in the scheme of things. But really what is most exciting that I want to share with you today is this opportunity that is EXXUA. EXXUA is truly a first-in-class, one-of-a-kind antidepressant, and it's going to be launched later this year through our sales infrastructure. And it's very much a plug-and-play opportunity because we already call on psychiatrists here in the United States. We have about 40 sales representatives in various markets around the country. And so the opportunity to plug EXXUA into the portfolio will be seamless. And it is clearly a unique opportunity in multiple ways. First and foremost, this is a product that's market ready, and we again plan to bring this product to market no later than the end of this calendar year. It's already FDA approved, has been for quite some time. We just announced this deal a few weeks ago, as I said, and EXXUA truly does stand alone in that it is very targeted in how it works. It specifically targets what's called the 5-HT1A receptor, which is one of the primary receptors implicated in mood and anxiety. And so this is specifically upregulating and allowing that receptor to essentially get activated. And so it truly is unique. It is not an SSRI like Prozac or Paxil or Lexapro. It is not an SNRI. It is truly, it's one of a kind. It's in its own class. It's the first ever 5-HT1A to be approved for major depressive disorder. It's been studied in well over 5,000 patients, demonstrating high levels of effectiveness. And one of the things that's very important about EXXUA is that it does not cause some of the leading side effects that are most notably attributable to the SSRIs, including sexual dysfunction and weight gain. And we'll get into that a little bit more. So truly a unique profile for a product that competes in a gigantic category. There are over 340 million prescriptions of antidepressants written in the US alone every single year, 345 million, in fact. So it's a huge market, 3.5 times larger than the ADHD market. And so we're quite excited by the prospects of what EXXUA can do. Again, just a highlight of the base business. Again, keeping in mind, EXXUA is not in this revenue number because we have not yet launched this product into the market. So we generated about $66 million in revenue. Most of that, the significant majority of that is through our ADHD brand. So again, we are already squarely leveraged in the psychiatric market with ADHD. And so given the fact that we are bringing EXXUA now to the market, we will index and be leveraged even more so to the psychiatric market and are excited about the prospects of bringing EXXUA into the fold while we expect that we can continue to grow these products, given the fact that they're known, they're established, and our sales force, of course, will continue to have these products in their portfolio. One of the things that separates Aytu significantly from the competition is our best-in-class patient access program that we call Aytu RX Connect. This was an in-house developed program that is aimed at driving patient adherence, keeping patients on therapy. And to do that, you must give them predictability. You must give them predictability in access, and affordability. And this does both. We ensure that through a network of about 1,000 pharmacies around the country, and that includes a large number of those being independent pharmacies in most of the major markets, as well as 3 regional grocery chains with whom we've partnered. We ensure that those pharmacies have our products available, and we also further ensure that these products are available at a price that's affordable to patients. And in the case of the ADHD medications, commercially insured patients never pay more than $50 per prescription per month. And that is a very reasonable price for a brand, particularly when you consider the benefits of our brand. And when you consider the generic nature of the ADHD market, we're able to compete very effectively. And these pharmacies not only have products available and ensure that they're minimizing patients' out-of-pocket costs, they're also minimizing the hassle to the doctors, such as helping with prior authorizations and some of the things that need to be done to ensure that patients get their prescriptions filled. And what's important is this creates a very high level of stickiness, so to speak, of our prescription products. And we think EXXUA will benefit very well from this setup. 85% of our core brands are run through this network. And so we have a high level of insight and control over these prescriptions that flow through. Again, 85% of the time, these prescriptions are being filled by a partner pharmacy. And we say control because we're able to have direct insights into the patient copays, into how much the pharmacies are paying. All the economic incentives align to ensure that these pharmacies fill our brands and not generics. And that really enables a perfect hand in glove situation when we introduce EXXUA into the fold here. As I mentioned, we have a sales force already of about 40 people. So the EXXUA opportunity is plug and play. Fits right into their portfolio as they're calling on their psychiatrists each and every day, and EXXUA will become the priority. And we will obviously be able to fill in white space through non-personal promotion, electronic means, things through various non-personal avenues. And that brings us to this very exciting opportunity, which is EXXUA, which obviously I've spoken to. Major competitive advantage is, first of all, it's effective in treating major depressive disorder, but it avoids sexual dysfunction, which is something that plagues most of the treatments in the market today. Patients are consistently moving off of SSRIs because of the problematic side effects, most notably sexual side effects and weight gain, and there are neither associated with this. It's because of this novel mechanism of action whereby EXXUA specifically targets the 5-HT1 receptor. Again, a receptor that has largely been demonstrated to be a key modulator of mood. So it's very targeted, and by being very targeted, it limits the off-target effects and side effects, most notably, again, sexual side effects. This is a gigantic market, over almost 23 billion, in fact, in US market size. Patent protected through 2030, so a nice 5-year runway for us as we move forward. The opportunity to extend the IP through additional indications, and ultimately the pricing in the major depressive market is substantial. The pricing power is substantial in that when you look at the newer brands that have been marketed recently, they are significantly higher, and reimbursement rates are also significantly higher. So you have a market that's 3.5 times larger than the ADHD market, and pricing that is multiples higher when you get to both gross and net pricing. And frankly, reimbursement, particularly on the public payer side, is mandated. Medicare plans have to cover all antidepressants. That's been relatively recently legislated, and so we are the beneficiaries of a very open reimbursement scheme here in the US. Significant unmet needs remain for the 20+ million patients suffering from major depressive disorder, most notably the fact that there are side effects, and almost all of the time, pretty much every patient will experience some side effect over the course of their treatment. And a big chunk of those, again, up to 70% of those patients will complain of sexual dysfunction that is a result of their treatment. It's also important to note that patients often have comorbid anxiety with their depression. And it's important to note that not only does EXXUA address the depression symptoms, it also demonstrates a high level of effect in anxious depression as early as week 1, very rapid onset. And when you really look at the products that we will be competing with in this gigantic market, SSRIs, SNRIs, Wellbutrin, which is the molecule bupropion, Trintellix, which is a relatively recently launched brand, and Auvelity, an even more recently launched brand. First of all, we stand apart really across the board in that they all have in their prescribing information risks and warnings associated with sexual side effects. We do not. Many products cause weight gain, in some cases extreme weight loss, which is not necessarily a great thing. We do not carry any warning around weight. In fact, weight neutral, conveniently once a day dosing, and again, a truly novel mechanism of action, which outside of Auvelity, it's a lot of products that essentially do the same things just a little bit differently, as opposed to truly attacking a different receptor, which EXXUA does in upregulating the 5-HT1 receptor. And the opportunity is substantial. If you truly just got tiny little pieces of the market, just for example, got 3% of Auvelity, or for example, got less than 0.01% of the SSRIs, any way you slice it, you can see a pretty clear pathway to 1 million prescriptions annually with very, very minimal market penetration. And if you look at the products that are on the market today, these are branded products. These are products that have high price points, and aren't necessarily early line therapies. The trajectory on these products is enormous. Particularly, I'll draw your attention to Spravato, Caplyta, and Auvelity specifically because they're the newest. We think the opportunity for EXXUA is tremendous. We're already well aligned to psychiatry with our sales force. We'll actually be even more aligned here in the coming months as we index heavier to depression. But suffice it to say, we're already very well positioned, and we expect to more fully align here in the coming months. We'll employ a full promotional mix, inclusive of obviously the sales force, but also we'll work on various strategies around distribution. We'll, of course, work with payers to ensure broad coverage. We will obviously leverage A2Rx Connect, and we will do very targeted, efficient, non-personal promotion to augment our in-person selling. And just as I round things out and open it for questions, we just upsized an offering with an excellent syndicate of investors, healthcare focused, institutional, long-term investors participated in this deal. We priced the deal at market. The market price was $149. We priced the deal at $1.50. Nantahala Capital was the lead investor, coupled with Stone Pine Capital Management, and then several other very reputable long-term, long-only funds. So we collected 16.6 million gross, netted about 15.5, and that was on top of the cash that we had on hand. So we are well positioned from a cash perspective as we move forward. Earlier this week, we also announced the refinancing of our debt to kick out the maturity one more year to 2029, and added about $4 million of incremental cash that just enables us a little bit more flexibility. So we're well positioned from a cash perspective. And just so you know, we think we know what we're doing, and that we know how to grow products. We know how to get them reimbursed. We know how to sell to physicians, particularly psychiatrists, as evidenced by the strong trajectory of our ADHD portfolio. That really has been our focal point. And so with that, we're a very well-positioned company that we've got a first-in-class treatment. We've got our effective ADHD products that really serve as our base business and to some degree of funding mechanism. We've got a really exquisite commercial infrastructure that's highly leverageable, already largely in the psychiatric offices and calling on these physicians. And we've really improved our operational efficiencies to put ourselves in this spot today. A management team that's highly experienced, led by myself and my identical twin brother, Jarrett, who founded the company with me. And we are poised to launch EXXUA and continue to really maximize the growth of the current base business. And shares outstanding, just under 9 million. We do also have some pre-funded warrants, and so that takes really our fully diluted outstanding share count to just over 23 million shares. And again, we just completed a financing a few weeks ago, $1.50. It was a common only deal. The only warrants were pre-funded warrants for ownership limitations, so really was a very clean deal, led again by healthcare-centric long-term investors, most notably Nantahala Capital and Stone Pine Capital. So with that, I will stop screen sharing and happy to open it up for questions.
Yeah, a few minutes left here. The first question from Peter. He said, what's the likely impact on the company's sales with the launch of generics of ADHD drugs, or how much would the launch of EXXUA make up for the potential drop in the sales of ADHD drugs?
Yeah, really good question, Peter. Thanks for that. I mean, I think EXXUA many times more than makes up for any potential loss with any generic entrants, which could come potentially later this year into next year. We have a single paragraph 4 filer, which generally means there will not be death and destruction. There will not be a massive hit on revenues, most notably because we do have 85% of our prescriptions really protected in a real way. And so with that, we feel very good that EXXUA more than offsets any potential decline from generics.
This question from Henry is asking your stock has been doing well recently. Is there any particular reason behind that?
Well, I think it's a couple of things. I mean, I think the market clearly saw our performance in the March quarter. We reported a really good quarter of 18.5 million, 4 million in positive EBITDA, 2 million in positive operating income, positive net income. Sales were up significantly from prior periods. So I think there was good response to that. And so it was really organically and then very positive response to the financing to shore up the balance sheet and positive response to EXXUA and enthusiasm around that. So I think that's really what's driving the positive reaction here over the last several weeks.
So what's the this one from Alan, what's the expected revenue for 2026?
We don't guide, Alan. So, I mean, what I would say is, we feel comfortable that we would expect to continue to drive revenue growth. And obviously, as we bring EXXUA on board, we think we have an opportunity to be significantly higher than the current revenue run rate, which, again, is about $66 million. So we expect significant growth from where we are today.